Hello, in this presentation, we will create financial statements for the month of February in our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to first take a quick look at QuickBooks and then jump over to Excel and generate the financial statements. In accounting software such as QuickBooks, the creation of the financial statements is something that will be automated. We can just create the financial statements based on a preset set of conditions, and the system will then generate those financial statements. So if we go to the balance sheet reports, if we had entered everything properly, QuickBooks can go through a set of systems and create the balance sheet report for us, as well as the income statement and other types of reports, including, in this case, the journal. This is where we actually entered our journal entries, and we can actually see some of those reports as well. What's difficult for us to see within a QuickBooks system is how these two relate, how they tie together, how one was used to create the other, the links between the data input and the forms that are being generated. These links are going to be important because they help us to enter the data properly and make sure that the financial statements are being generated in the way they should be generated. So that's what we're going to look at now as we create the financial statements within Excel. Here we are in Excel, and we are in our adjusting entries tab, and we have created or input all of the adjusting entries and now have our adjusted balance worksheet. Just to show that, I'm going to go ahead and unhide this real quick and let you see the two columns, and then I'll hide this back up again so that we can work from these numbers. These are the numbers that we will be working with in order to create the financial statements. So I'm going to put my cursor on K. You don't have to do this, just a demonstration from K to N. So I got my cursor here so I see the drop down. Selecting that and scrolling over to N, letting go. Then I'm going to just right click on that highlighted area and unhide. And that'll show us, just to show that we have the unadjusted trial balance and then our adjustments and the adjusted trial balance. So to recall the full process, the second month we had the full process, unlike the first month in that we didn't do the adjusting entries in the first month. In the second month, what we have done is we have done all the financial statement entries, all the journal entries during the normal accounting process in this tab over here. We posted them to the general ledger. The general ledger was used to create the unadjusted trial balance. We then went to our worksheet over here to enter our year or month end, I should say month end adjustments, and those into our worksheet here to get our adjusted trial balance. This now is going to be the adjusted trial balance. These are the numbers we think are most correct to create the financial statements that will actually be distributed if we were to distribute financial statements elsewhere. Financial statements most closely related to the accounting principles we want, generally accepted accounting principles usually being the goal. Note, as we have gone through this, however, we've been able to generate the financial statement and a trial balance as we enter data all the way through this tab. We have the financial statements being generated automatically. It's just that they weren't really complete, or we're not ready to issue them until we've done the end of the month adjusting entries and made sure that they're all correct on an accrual basis. Then we're going to create the financial statements, and then we can send them out. Also want to note that these adjusting entries have been used in our worksheet here to make sure that the financial statements or the adjusted trial balance is correct for the financial statements to also be correct. They would need to at some point be entered into the system as well, meaning these adjustments would need to be entered into the general ledger at some point in time in order to get our general ledger accounts ready to go and all set up for the next time period as well. So I'm going to go and hide this back up again. So I'm going to highlight from L to M, right click and hide that, and just work with just what we need here. It's always good to just limit everything down to just what we need in order to put this thing together. So all we need is the adjusted trial balance. And we know that this thing is in balance because the assets or the debits minus the credits equal 0. If we were to add up the debits minus the credits, or the debits are positive and the credits are negative, therefore the debits minus the credits are 0. We also know that the assets, if I highlight the assets of debit balances minus the liabilities, which are credit balances, that equals 149,210. That should equal the equity. Assets minus liabilities are going to equal the equity here. So that's the 149,210. We also know that total assets, if we were to add up total assets, that's 228,392, should equal liabilities and equity. So if I highlight all this, that's going to be the 228,392. So we know that's in balance. That is the accounting equation, and the balance sheet is the accounting equation, so it has to work. And as long as we know it has to work, then we can put this together with confidence. And if there's a problem, we could just figure out where's the problem, and it's like a puzzle that we know has to fit together. And therefore, we're not going to doubt the fact that it fits together. We can go in and find the problem in the puzzle. So we're going to go through this now. We're going to start with the balance sheet. A lot of software, a lot of books will say that you need to start with the income statement and then do the statement of equity and then do the balance sheet. I'm not going to follow that principle. I think that's mainly done that way because if you do the balance sheet first, the equity section can be, we have to do some calculations to get to the equity section. However, if you're working in a well-formatted financial statement and trial balance, that's not difficult to do, especially if we are in Excel. And the benefits of doing the balance sheet first is that we can just go right from top to bottom, starting from assets and then liabilities. We can see the main format, the double entry accounting statement, which is the balance sheet, which has assets, liabilities, and equity on it. And then look at the detailed statements, the timing statements, the income statement, and the statement of equity. So that's what we're going to do. That's the format we're going to do it here. Just recognize that if you're working in other textbooks, they will say that the income statement should be done first, and then the equity, and then the balance sheet. So keep that in mind. We're going to go through this. We have the balance sheet first. This is going to be as of a point in time. I should have put the date here. I didn't put the date here, but and the name. We should put the date and the name. But I'm just going to put the numbers and show that these numbers over here can be formatted into a balance sheet format and be in balance, and see how that system will work, so that when you're working in software too, you know how the software is automatically doing this stuff. And this is stuff that can be automated. And so we want to know what the automated process is doing. So we have the assets. We're going to break out into current assets and property, plant, and equipment, or more long-term assets. And so we're going to have these accounts. We're just going to go from top to bottom and say which ones do we want to be including in our current assets. We have the checking account. Clearly that's going to be a current asset. Accounts receivable, inventory, prepaid insurance, and short-term investments. Those are all going to be current assets type of accounts. What does that mean? They're fairly liquid. We expect them to be converted into cash or used within a year's time period. So I'm just going to we could copy them, or we could use formulas. Let's try formulas. I'm going to put my cursor in AI4. We're going to select equals and just point to that checking account. And we've only been, most of the time when we use formulas, we're just working with numbers, but we can pull over wording with formula as well. And so let's do that. So we're going to select equals, and we're just going to pull over that checking account, just clicking on the checking account, and there we have it. Now, oftentimes in the financial statements, however, we may not want to put checking account. Doesn't sound quite right. We're going to convert that. I'm just going to change it to cash. So we're going to say that that's going to be cash, and then we'll put the amount, which is going to be, I'm just going to say equal to that 98,997, and enter. And then we're going to put the accounts receivable. So once again, I'm in AI5. I'm going to do this with a formula by saying equals, point to that accounts receivable, and tab. So there we have it. Note the formatting of the cell has been indented for us. And the reason for that, if you know how the formatting works in many financial statements, it can help you read, especially more complex financial statements. Here we have the assets. We have the colon representing that it's going to be a subcategory of these current assets. And then we are indenting the current assets to show that they are part of this subcategory. We are now in AJ5, and we're going to select equals and point to that 11,274. And then we're going to pick up the inventory. So we are in AI6. We're going to say equals and point to the inventory. Tab. Now we're in AJ6. We're going to say equal. And we will point to the 1313 in the inventory assets. Next, we have the prepaid insurance. Prepaid insurance is also going to be a current asset. So we're going to be down here in AI7. We're going to say equals and point to prepaid insurance, pulling that over. The amount in AJ7, we're going to say equals and pull over the amount of 10,083 and enter. Then we have this zero balance here. I'm not going to put in the zero balance this time, although we had the zero balance when we were working through it. As an automated system, we showed all the accounts. This time, since we're making a bit more formal of the financial statements, we're going to remove any account that has a zero. So we're going to take that out. We have the undeposited funds. Undeposited funds is really a format of cash because it's cash that has not yet been deposited. Instead of breaking that out here, we're going to put that into our cash account. So I'm actually going to include that in the cash account here, and the cash being a broader category in this case as we create the financial statements, including the checking account and the undeposited funds. This grouping ability is one of the reasons or one of the benefits of being able to do this in something like Excel. We can make the groupings what they need to be. It's often the case that we have more accounts over here on the trial balance than we want to include in the groupings. It's a little bit more difficult to do that in accounting software, to do things like change the name here and adjust the groupings very easily. We can use subcategories and other types of functions to adjust the grouping, but the grouping is typically done by driving mainly through, in the case of QuickBooks, the type of accounts that we have. So in order to do this, we're going to double click on the cash, and then we're going to say plus and add this amount to it. So I'm going to double click here. We see the checking account is already there. I'm going to say plus after the 3, and we're going to add to it this 4,500. And that's what we're going to have in there. So if we double click on it, that's what we have. It should be N3 plus N8, and then enter, and that'll be it. Now that's what we have now. I'm going to go ahead and underline this, and we're going to go to the Home tab. We're going to go to the font group and underline, and I'm going to pull the balance all the way down here to the outside. So it doesn't mean debits and credits. This inside and outside doesn't mean debits and credits. It just means that this is going to be the subcategory of these current asset accounts, and then we're going to pull the balance to the outside. I'm going to sum up here from here all the way down and enter these 2 blank cells as well, just in case there's anything we need to pick up that we missed as we go. So we're going to say equals SUM, double click the sum function. We're highlighting what from the 103,496 down all the way, and I'm including those 2 blank cells, and that gives us the 126,167. If we want to double check that, we can highlight this information over here all the way down, and that's the 126,167. Looks good. We found a home for all these. So I'm going to put a little yellow mark next to them and say, yeah, we found a home for those. Once we find a home for everything, we should be in balance. Then we're going to go to the property, plant, and equipment. That's going to be these 2 accounts that are still green that we haven't done yet. They're not current because they're not things that we're going to consume in the near future, but things that will be used to generate revenue over an extended period of time. You'll note that the accumulated depreciation is before the furniture and fixture. That's because if we were looking at something like QuickBooks, it's going to group these both as property, plant, and equipment accounts, and then if we don't have account numbers, group by alphabetical order. So that's why this is before that. In reality, or it should be, it would be more proper to have the furniture and fixture above because this is the controlling account. This account is related to it. So we'll flip that as we put this into the financial statements. So we're going to be down here under property, plant, and equipment, subcategory, and then we are in I12, we're going to select equals and point to that furniture and fixture first. And I'm going to go ahead and indent this as well. I'm going to go to the Home tab, Alignment, increase the indent. And then we'll put that in the inner column. So we're in AJ12 equals and pointing to that 103 and enter. Now this is where a lot of people will make a mistake here on the financial statements, and that's because this is a contra asset account. So as we move this over, there's a question as to whether we should increase it or decrease it or subtract or add it. Note that it being a contra asset account is bringing down the debit balances, meaning the debit balances are going down by this contra asset. When we move it to a plus and minus format, as we're doing here, we still want to subtract it from the total assets. It won't be a credit, but it'll be a subtraction from the total assets because we're not working with debits and credits here, we're working with plus and minus. In order to do that, to show that, we could put a less with words. That's what I'm going to do. I'm going to put less accumulated depreciation, and then we could show the amount as either a positive or negative number. It'll depend on the type of financial statement you're looking at. And that's one area you got to be careful of, because there's going to be sometimes when we put minus and positive numbers to represent a subtraction problem, and sometimes when we just don't put anything in there and we assume people know. For example, revenue minus expenses, we don't usually say minus expenses or put negative expenses. We assume that it's the income statement. That's how the income statement is, and it's so common that people will know that. But in something like this, we might put the word less here. So we're going to put less accumulated depreciation. And then I'm going to flip the sign. I'm going to put a positive number and tell our reader it's a subtraction problem with the words less. So I'm going to be in AJ 13, put a negative sign instead of equals, and point to that 775. It'll take the 775 and flip the sign to a positive 775. We're then in the outer column. I'm going to do the subtraction problem. We're going to take this 103,000 minus the 775. So we are in AK 14. We're selecting equals, pointing to the 103,000, selecting minus, and then pointing to the 775. And that gives us the 102,225. So we can check that again by highlighting from here to here. It does do a subtraction problem, but this is a debit minus a credit versus just a plus and minus this minus that. Gives us the 102,225. That's going to be all of our assets. So we're going to go ahead and say we found a home for those. I'm going to highlight that. And then in our total assets, we're going to sum up the outer column. Note we're not going to sum up anything over here because we've already done something there. We don't typically jump from column to column when we add things up. We're only going to be working with one column at a time, in this case the outer column. So we're going to select equals in AK17. I'm going to use the sum function, even though we could use just a plus and minus and there's only two numbers. But I'm going to sum up all this, even though there's blank cells. That disturbs people sometimes, but that's okay. These blank cells won't do anything. It's just going to be this number plus that number. And that's going to give us the 228,392. If we want to double check that number, all we have to do is highlight from here down to here. And we get the sum from Excel tells us it's 228,392. So it looks good. We're going to move to the liabilities now. Moving to the liabilities, we're going to put these liabilities on the right-hand side, not because it's debits and credits, just because it's going to be in accordance with the accounting equation, assets equaling liabilities and equity. We're going to break this out from current liabilities to long-term liabilities. Current liabilities, remember, are those that are going to be due within a year's time period, and it's useful to compare those to the current assets. And then long-term are going to be those that are going to be extended past the year's time. Going through these, we see accounts payable, current, Visa, current, interest payable, current, loan payable, it says current, so that's going to be the amount of the loan payable due within a year. So that's current. And payroll payable, current, sales tax payable is current, unearned revenue is current, and then this one says long-term. So they're all current except for this last one. So we can go ahead and be here in AM4 equals the accounts payable tab. Note it's indented here. We're in the current liabilities section of the liabilities. Now in AN4, what we want to do is pull over this number, but I want to flip the sign. I want to make it a positive number. We don't want debits and credits over here. In order to do that, rather than selecting equals, we're going to select negative of that number and enter. Now we have the Visa, and over here we may not want to put it as Visa. We might want to put it as credit card or even some type of debt account, since it's going to be more of a formal financial statement. So we'll change the name and put it something like that, which again, something that we can do pretty easily. And when we formatted it like this, a little bit more difficult to do those types of formatting changes when working in QuickBooks. So we're going to say negative of that number. And then we have interest payable. So I'm going to say this equals the interest payable tab. Once again, I'm picking up that 25. So we're going to say negative and pick up that number. And then we got the loan payable current portion. So we're going to say I'm in AM7 equals loan payable current portion tab. We're in AN7. We're going to say negative of the loan payable, that 18,109, enter. We are in AM8. we're going to pick up the payroll liability equals the payroll liability. Tab, we're in AN8. We're going to say negative and pick up the number with it 1654. Negative of that 1654. Enter. We're going to scroll down just a little. Now we are on AM9. We're going to say equals and pick up the sales tax payable. Tab. We're in AN9. We're going to say negative of that sales tax payable, the 125. Enter. Now we're in AM10. We're going to say that equals, and we're going to point to the unearned revenue. Tab. And then we're in AN10 negative of that 300 and enter. Now, if you're wondering, you might be saying, hey, there's an easier way to do that. We could use relative reference. So I'm going to delete this and just show you that we could have done that a lot faster. We could, after we do the first row, don't do this. I'm just going to delete this. And I could just highlight after we've done this first row, all the rest of the rows are going to be relatively the same. So we're going to put our cursor on here and just autofill it down. And there it is. I went a little bit too far. I'm going to autofill it back up. And it'll do that for us. And it'll pick up those numbers and just know that we need to go down to the next cell. So that's very, very nice. And so then we're going to go here. I'm going to underline this. I'm going to go to the Home tab, Font Group, and Underline. And we will have the current, total current liabilities here. So in AM11, we're going to type in total current liabilities. Then we'll sum these up to the outside. So I'm going to pull this to the outside. Doesn't mean debits and credits. It just means here's what we're doing. We're going to have current liabilities and we put them in the inside. And then here's the sum of what we just did. So we are in AO11. We're going to select equals and SUM. Double click the sum function and highlight from the 1002 down to the 300. And that should give us the 22,413. If we want to double check that, then we can highlight these items, everything except that last orange account, and we get 22,413. That last one we're going to put down here, and we're just going to put it in its own category. I'm not going to call it long-term liabilities because there's only one of them. And if we were to do that, we'd have to have a subcategory, and then we'd have 3 lines to pick that up. So what we're going to do is just put that all by itself over here. We're in AM12. We're going to say equals and just pick up this one long-term portion and put that in the outer column because we don't need a subcategory with just one line. That could be a little confusing. So we are in AO12 equals, and we're just, actually we need to say negative, and we're picking up that 56,769 and enter. And so there we have it. And then we're going to have the total liabilities, which will of course be the current portion and this long-term portion. So here within AO13, we will use the sum function. So we're going to say equals SUM, double click the sum function and highlight the 22,413 and the 56,769 and enter. There's our total liabilities. Once again, if we want to check that, and we do, we're going to go over here and highlight all the orange accounts. And we see that it adds up to 79,182. It looks good. Now we need the equity. The equity typically only has one number on it. It's going to be a little bit different on QuickBooks, which tends to put the net income in the equity section to show the tying out. It's trying to help us to see how those financial statements are related. But when we issue the financial statements, we usually don't do that. We usually just have whatever the equity numbers are going to be. If it's a sole proprietor, it's just going to be the one capital account. If it's a partnership, it'll have multiple capital accounts. If it's a corporation, it'll have retained earnings and common stock. And it could have some additional paid in capital, some other items. But in this case, what it won't have typically is going to be net income included or the draws within there. Those will be on the statement of equity or the statement of retained earnings or the statement of stockholders' equity. So what we're going to do here is pick up the account that will be on here in a sole proprietor, which will be this owner's equity. So I'm going to pick up the owner's equity. And first what we're going to do, I'm going to show you the wrong way why this doesn't work. And then that'll give us an idea of what the other statements are going to do. What doesn't work is I'm going to say that one number, I'm going to say is the negative of this number. It's that number. I need to flip the sign so it's not a credit. Pull it over here. And then when I sum them up, if I sum up, double clicking the sum function and highlighting the liabilities and the equity, And that will give us the 223,262, and that doesn't match the assets. Therefore, the assets don't match the liabilities and equity. We are out of balance. And the question, of course, is why? And note that we didn't find a home for everything. If I highlight these, we found a home for all this, and then we kind of found a home for this, but we didn't do anything with all these other accounts. And note that this balance sheet is everything. This is assets equal liabilities plus equity. This is the whole thing. And therefore, the problem, of course, is that we haven't found a home for all these. All this information here, not included. All this information down here, at least, not included in this number. Why? Because this equity account really includes all these blue numbers. We're going to smash this into just one number and put it there. This is really giving us the detail. It's breaking out that number. And that's the most difficult thing to understand with these relationships. So in order to do that in Excel, all we have to do is pick up all these numbers. If I just highlight the whole thing, then that's the 149,210. If we pick up that number, it should work. Let's see if that does. To do that, I'm going to use the negative sum function. I'm going to say negative sum, double click the sum function, and we're just going to pick up all the blue numbers. I'm going to pick up everything that is blue, debits and credits, and the debits minus the credits will be the 149,210. So the credits are beating the debits. We flipped the sign and we put this number here. Now we're in balance. Total assets equaling liabilities and equity. And so that's going to be the key here. Now we found a home for all of these numbers, but we really just smashed them into just one number. And what we want to do is break out. I want to find a separate home for all the numbers. So we can think about that two different ways. We're really, all these statements down here are finding a separate home or breaking this total number out into its components, giving a timing component to these statements. And that's what we're going to be looking at here. So, or you can think about these statements are part of the creation of this in number there. Either way you look at it, it's easy for us to figure out this number and look at the big picture, the picture as of a point in time, if the adjusted trial balance is set up correctly, to just sum that up, and there we have it, and we can see we're in balance. Now we want to see the detail related to this this account, this number. And we're going to do that with the other two statements, the timing statements, the income statement, and the statement of equity. So we're going to start with the income statement. Note that we will be putting the income statement together for the month of February rather than combining the months of January and February together. If we were to combine the 2 months, the balance sheet would be the same as with just 1 month of operation because that's a point in time. The income statement would then differ, including 2 months of information rather than 1 month of information. When combining the stuff together within Excel, within QuickBooks, that is one advantage of QuickBooks in that we can do this fairly quickly, typically, by just adjusting the date ranges from 1 month to 2 months, including and making those adjustments. Within Excel, of course, it takes a little bit more detail for us to break out whether we want just 1 month of data into our reporting or 2 months of data within the reporting. We're just going to be working on February at this point. If you would like to see the information for 2 months of data as we go for January and February, you can go to this second tab over this last tab, the financial statements for the 2 months, and this will give you the same information. We'll be drawing from the same information, meaning we'll be picking up the same type of data from the trial balance, but the trial balance has now been adjusted to pick up the first and second month, and will therefore give you the income statement for the 2 month time period, so you can compare and contrast the 1 month and the 2 month time periods for the financial statements. And we're going to skip these two. We're going to find another home for all these blue accounts, and we're just going to find a home for all these accounts. So we're going to start with revenue. We have 3 kinds of revenue. Those are going to be the first accounts on the income statement. We have these 3. So we're just going to add those and put those here. So we are in AI 21 saying equals and pointing to that merchandising sales and tab. We're going to pull those to the inner column, not because they're debits and credits, but because we want the subcategory on the inside. So we are in AJ21. Instead of selecting equals, I'm going to put negative of that number, flipping the sign to that 2,500. Then in AI 22, we're going to say equals the rent equipment, rent music tab. And then in AJ 22, we're going to say negative of that number, that 4,005, making it a positive number on our plus and minus financial statements, the income statement. Then in AI 23, equals, we're pointing to the service now, the service revenue. And in AJ 23, we're going to say negative instead of equals and point to that 9,300 and enter. Then we have total revenues. We're just going to add these up, of course. We're going to total them up to the right-hand side this time using the sum function. So in AK24, we're going to select equals, SUM, double-click that sum function, highlight the 2,500 down to the 9,300, giving us 16,300. Now we found a home for these three items. We'll make those yellow. And if we want to double check the number, we just highlight these and say that's what they should be, 16,300. It's a credit here represented by negative numbers. It's a positive number here because we're not working with debits and credits. In this case, we're working with plus and minus. We then have the cost of goods sold. That's going to be our most important expense with relation to the inventory sales, the things we sell for inventory. That's why we break it out into its own subcategory if we're a merchandising company. And therefore, we're just going to put that right on the outside column. We don't need a subcategory for it because, once again, it's one of those situations where there's only one number. So we're just going to put that on the outside. And so we're going to say that this equals that 2,000. Enter. And we found a home for this item. We'll highlight that. Then we typically have a gross profit subcategory. That's going to be the total revenue minus the cost of goods sold. So we'll do that calculation now. It's going to be equal to the 16,300 minus the 2,000. Enter. And then all the rest are going to be expenses. So everything down here is going to be expenses now. So we're going to remove those expenses that have zeros this time and put in, and not everything's expenses, by the way. We have income down here, but that's not a not normal part of operations. So we'll deal with that in a second. We're going to remove the expenses that are not going to be, that have zero balances this time as well. So let's go through these. We got the bank service charge, and we are in AI 28. We're going to say equals and point to the bank service charge and enter. We're going to be in the enter column because it's a subcategory. Equals and point to the 20. Note that we're in order by, over here within the expenses, we're in order by alphabetical order because QuickBooks sees it as these are all in the same category of expenses, and then it categorizes by alphabetical order unless we assign account numbers. So this might not be the best order. We probably don't want to start the expenses with the bank service charge. I'm not going to adjust that right now, but just note that it's something that when creating the formal financials, we might want to put in an order that's more relevant, maybe from most expensive expense or highest expense to lowest or something like that. But we're just going to keep the same alignment here. And then we're in AI 29. We're going to say equals, point to the depreciation tab. We're in AJ 29. We're going to say equals and point to the 775 and enter. We are in AI 30. I'm going to say equals and point to the insurance expense and tab. We're in AJ 30. I'm going to say equals and point to that 917 and enter. We're in AI 31, going to say equals and point to the interest expense and tab. We are in AJ 31 equals and pointing to the 621 and enter. We are in AI 32, we're going to say equals and point to the internet expense and tab. And then in AJ 32, we're going to say equals and point to the 180. Now we're going to skip these two zeros down here. We're going to move on to payroll. So we're in AI 33, selecting equals and the payroll and tab, and then we're in AJ 33, selecting equals and pointing to that 5795 and enter. In AJ 34, we're going to select equals and point to the telephone tab. In AJ 34, select equals and point to the 365 and enter. One more time in AJ 35, we're selecting equals and pointing to the utilities tab. And then in AJ 35, we're going to point to, or equals, point to the 648 and enter. So there we have that. It's most common to get messed up in the expense area because, of course, there are more expenses typically than any other type of account. we could have used the autofill, but if we're removing the zeros, then we have to be careful as we remove the zeros if we were just to copy these cells down. And there's also a lot of grouping that happens within the expenses, so we want to be aware of different types of grouping and different type of ordering that we may want to do as we create the financial statements. So let's go ahead and underline this. We're going to go to the Home tab, Font Group, and Underline. We're going to pull this down to the total expenses. I'm going to sum this up using the sum function, highlighting all the way down in case there's a couple accounts we missed, and we need to add them in there. So we are in AK 38, selecting equals and SUM, double-clicking the sum function, and highlighting from the 20 down all the way down. And there we have the 9,320. If we highlight all the expenses from the 2,000 down to the 648, we see that we have 11,320. So something went wrong here. Oh, no, I see what happened. We included the cost of goods sold, so we're going to highlight from the 20 down to the 648, and we have the 9,320. So that's just the cost of goods sold I was including there. Note though, it's very common to have a problem within the expenses and then just need to go back in there and just tick and tie each one of them out and see where the problem is. In this case, we got it, so we're going to highlight and say we found a home for all of these items now. Make those yellow. At this point in time, we've only not found a home for this other interest income, and then of course these two items here. So scrolling back down, we're going to have a subcategory. This is going to be net ordinary income. We're not including interest in the ordinary net income because that's something that's only dealing with financing. And if it weren't for the finance or investing in this case, and if it wasn't for the investment, we wouldn't have that there. It might be, but we should possibly be putting the interest expense down there as well, but I'm not going to do that because it wasn't done in QuickBooks. So note that the interest expense and the interest income possibly should both be down in the other category, but I'm going to keep the formatting here. We are in AK39. I'm going to select equals and point to the gross profit, 14.3, minus the 9,320 total expenses, giving us that gross profit of 4,980. Then we have the other income and expenses where we're going to put the interest income. And notice that we really should have expenses if they're expenses in brackets. And what this means is, and this is another area with this plus and minus thing. Note that up here, when we have gross profit minus these expenses, we don't tell our reader at all that it's a subtraction problem. I don't have a negative number on the expenses. I don't have a negative number here. I didn't put less expenses. It's just we expect the reader to know that it's going to be revenue minus expenses. If we go down here, however, we're talking about other items that could be revenue or expenses, and therefore we need to note to our reader whether it's going to increase or decrease with a sign or brackets. So in this case, we would use brackets if it was going to decrease and not brackets if it's going to increase. So we're going to pick up this interest income, and this is a good example of the fact that when we're going to put this in the outer column, by the way, when we're over here in the plus and minus financial statements, this piece right here is actually income, and it's increasing the net income because all the credits are income and the debits are expenses. So the credits are winning, which in our format here are negative numbers. When we go over to the plus and minus format, of course, we're saying that the positive, we want this to be a positive number. So this needs to be a positive number over here. It needs to increase our net income balance. And therefore, we are in AK41. We're going to say negative of that number, making it a positive over here, something we need to increase. So now we have the 4948, and we're going to add this. Just to show that one more time, if we scroll down and we highlight from here down to here, we have the 4948 in a credit. And if we highlight and include that 250, that's what gives us the 5230 adding to our net income number. This should be the bottom line number we get to here. So let's do that now. We're going to sum up just the net ordinary income and this new interest income in cell AK42, selecting equals and SUM, double-clicking the sum function, highlighting the 4,980 and the 250. That gives us the 5230, looks correct. I'm going to highlight this. We found a home for that. And if we double check it, we can highlight the whole thing and just say it should be 5230. And there it is, 5230. It looks good. Now we found a home for everything except these two accounts. Again, we kind of found a home for here by having all of them, but we crunched it all into one number. Now we found a separate home on the income statement for all the income statement items. And now we just need to find a separate home for these two. And in order to do that, we are going to have the statement of equity. The statement of equity is really just matching out the beginning balance, the first point in time, the activity summed up to get us to the ending balance, which is represented by the balance sheet. So the bottom line number, the last number on the equity, should be this. Let's see if it is. We're going to scroll down to the beginning equities, beginning owner's equity. Probably should put the dates there, but I'm going to keep it at beginning owner's equity. And we're going to say that this equals, or it's going to have to be negative. We're an AK45 negative, scrolling up just a bit of that number, and enter. This number is the most confusing number when we convert this over. And why is that? Because here we don't have a date. It doesn't say beginning owner's equity. It just says owner's equity, and all other numbers on the balance sheet are as of the ending date, not the beginning date. So why is this one? Why are we saying it's the beginning date? Because really all of this is the owner's equity. This is almost, you can think of this as a format of a GL account, the general ledger account, for the equity section. All this is part of the equity section. We're showing the detail in the equity section. We need to add them all together, add the debits and credits together to get to the ending equity. This is showing the activity. So that means that this is the beginning equity unless something was posted to that equity in terms of an investment. That would be the only thing typically that would be there. How would we know that? We'd have to go to the trial balance and say, is there any activity in here that was an investment? So I could go back to the trial balance just to check that out. And we're going to go to the general ledger for equity. Here's the general ledger for equity. It started at the beginning balance here, and see, nothing happened. There's no activity. So no investment happened. Therefore, the balance on the trial balance is simply the beginning balance, the balance that was started with. We're going to go back to the adjusting entries, and so that's going to be this number. And then we're going to have the activity that happened, and the main activity is going to be all this blue account stuff, all this stuff. And we crunch that down to one number right there, net income. And so that net income is what we are going to have here. We're going to just say that this equals that net income. That's going to be the main activity. Now if we scroll back up, we found a home for this number now, and the only one we haven't found a home for is this number. That's going to be draws. Now the draws are a contra equity account. You can think of it as a contra equity account, meaning they act like expenses in that they bring down total equity, but are not part of net income. So this needs to bring down equity, because remember on the equity section, the credits win. That means this is decreasing equity. So we need to go down here and put in the draws. I'm just going to say that this equals the draws number here and enter. And I'm going to put, instead of just draws, I'm going to put less and tell our readers this is a subtraction problem. And then we have the net activity that happened. We had net income increasing and the draws decreasing. This is a subtraction problem, therefore. So we're going to say this equals and point to that 5230 minus the 100 and enter. And now we need the ending equity, which is just going to be the beginning equity, and then the detail that happened giving us ending equity. So we're going to say this equals the beginning equity, the 144.80 minus the activity, or I'm sorry, plus the activity, and then enter. Why is it a plus? Because this is an increase, this is a decrease, this is a net increase, not a net decrease. This is going to increase equity. This number then really encompasses all of the blue numbers. We can double check that by scrolling all the way up and including all the blue numbers. We just included that number, we included that number, and then all these numbers were included when we crunched that net income number in there, and that gives us the 149,210. That should match this 149,210. Now we want to go back and just double check that everything looks correct on a financial statement, see that it all ties out like it should. Meaning, 1, did the total assets equal total liabilities plus equity? It does, check. 2, Does the income statement, net income, tie out to the net income reported on the statement of owner's equity? It does, check. And 3, does the statement of owner's equity ending balance, the ending balance in equity, tie out to what is on the balance sheet in equity? So we got the 149,210 and the 149,210. So that all ties out, that all checks out. We've now found a home for all of these accounts on the financial statements, and therefore are left with something that is in balance on the financial statements, just reformatting these numbers from a debit and credit format to a plus and minus format to a account assets equal liabilities plus equity format.